Hey, what's up, everybody? This is Antoine, aka Crypto Trader, and this is Mining Trades. And um, pretty much what I want to get into here, I don't want to talk about my new strategy is a Hellraiser, but I don't want to get into that. And what I do want to talk about though is some stuff that's been going on in the market here. I had to re-record this, unfortunately, because my dumbass didn't have the microphone enabled. Okay, it was mute, and I'm sorry about that. So look, got to do a recap, and this time I'm gonna do it a little bit faster, hopefully. So here's my disclaimer. Got to show the disclaimer. Here's my face. Got to show my face. With the disclaimer, no, I don't. All right. So look, what's up, Monkins? Thanks for letting me know. I didn't even realize that till now. I'm like, wow, how do I let this happen? They should have like a thing that says, well, I can make it myself, but microphone is off, buddy. Microphone's off, buddy. You dummy. Turn the microphone on. All right, so look, let's go to the day chart on the SPX. I like to just start off by saying, I upgraded my trading view account. So now I can get these intraday values on the certain ETFs and futures contracts, which is great. So I don't have to switch between. I normally go to my Thinkorswim platform that's provided by TD Ameritrade, where I trade options, and I'm thinking about shorting. I did some shorts last week, but I'm thinking about it again. This thing actually blew up. It's coming up here again. So basically, what I did was I went through. Let's go back in time. Okay, and this is the SPX, which is the S&P 500 real time. Um, how far can we go back? Let's go back to 2008 when the market crashed. Well, what they dubbed as the market crashing. Okay, let's do a weekly. Uh, take the log off. Okay, and so this time right here, this is 2000. They didn't really call that a crash, but that was some sort of crash, right? That wasn't the recession, But if you look, I provide links to the in one of my previous videos called "If Bitcoin is Dying, Then I'm Buying." And if you notice anything, there's this thing called the Mayer multiple. And I know you're like, certain people are like, well, what's the Mayer multiple? Well, I don't know if you're into Bitcoin, you'll know who Mayer is. He's one of the guys people are listening to. I don't know exactly his whole background, but I can tell you one thing: this is nothing but Warren Buffett right here. All right, this indicator is basically what Warren Buffett would do. This is when Warren Buffett was saying when the market crashed right here between you see the Mayer multiple right here is green. So when the S&P, which is basically the entire stock market, because all the top stocks are inside the S&P 500, is heavily weighted towards the FANG stocks. So that's Facebook, Apple, Amazon, Netflix, and Google. Okay, FANG. All right, so those stocks basically make this thing move. I'm not gonna lie to you. It's really those FANG stocks that's making this move. Um, so back here, back in what year is this? 2007. Then it was 2008 and 2009. February 23rd, right here is when the market recovered. February, huh? That's a nice month. All right, so check it out. So what I'm gonna do is we're gonna do some rulers right here and see exactly, you know, there we have it. So that's basically 57%. Now that's it. Now 79 bars. That's a 2 month period of just, oh no, you know, if you guys trade stocks, then you know what this did to everybody's minds. They were like, oh, this is crazy. They didn't know what to do for some reason. But if you compare that to where we're at now, okay, from right here to here, Okay, I'm gonna tell you this is 12%, probably 11% down compared to this. But like I said, this is a month. All right, this is going on 23 bars. Let's zero in on this one. Let's zero in. All right, so we can really see how many bars it is, because these are weekly bars, mind you. That's what we're looking at. So I'm gonna press Shift. If you're using trading view and you want to do this at home while you're watching or whatever, get the top of the bar, and then we go down to what looks like the bottom of the bar down here. Okay, and I guess this is not going to work. You know why? Because I want to get this candle bar in there so I can get the dates right. What is this? 10 bars. That's 10 weeks. All right. And this is 3 bars. So that's 3 weeks, okay? So this is about close to 2 weeks, all right, right here. This pull back in. Let me go back to the daily so we can get this more comprehensible look at things. I want you guys to go away with some information. Now, you know how I trade, right? I don't know if you guys look the market fluctuates. I keep it really simple, you know, keep it really simple. So what you see is this is a about 12% move in 2 weeks, about 12 bars. Okay, bam. Then what happens? Then what happens? And from here to here, it pulls back, right? If that's a pullback, it recovers, okay, to this bar right here. A 12% rollover, then a 10% recover. Then what happens? Okay, I'm doing this for a reason because you guys can learn a little something. I mean, this is a good way to trade. One of the best things, I mean, that I found to use. Now look, then it goes and it falls back now 5%, and obviously this is like another 5%. Why you didn't go all the way up? That's like 6%. Why you didn't go all the way up past the top? Because somebody was like, hey, let's go back down again. That's why. All right. Somebody said let's do that. So it went down another 8%, and now here we are again. Okay. Up. What is this? Close to 4%. I know you're like, why'd you do that? Well, look, these are the moves that are causing people to say, well, let's sell the rips. So when this thing rips up, you know, we got people thinking about selling the rips instead of buying a dip like down here. Sell a rip because I mean, maybe we go even lower and you can catch it. If you can sell a put, you're good. To put it to you like that, wink, wink. Put it to them, man. It's time to put it to them. All right, so let me move this up a little bit. All right, so this market pulls down. I mean, what are really substantial moves in the S&P that'll cause you to say, you know what, we're going down and this is bad and all that? A 3% move, a 10% move looks like this. All right, let me zero in. I can't begin to figure out how many days are in here without zooming in. Use my zoom in tool. All right, so let's just take this. All right, boom. All right, that was the wrong tool. You should have switched. All right, I feel like Tone Bay's up in here right now. Man, it's normally easier than this. How many days is this? Anybody know? Let's see. 7 days. This is 1 week. 11% down pull. Then it goes back up. What? Let's see. Just to see. 8%. So it moves down 10% basically. All right. 10%. Let's recap. 11%. Goes up 8%. All right. What happens here? It goes up 12%. And 12 bars, 24 bars. So that's took a whole month to go back up there. Okay. Notice how fast it ripped in 1 week and how slow it took pretty much 2 months, basically 48 days is to recover. Okay, back to where from whence it came. And you got millions and millions of trades happening in a second. All right, millions of trades happening in the S&P daily. Okay, I mean I'm not even gonna tell you the numbers right now, but this is the most traded product in Wall Street. Okay, now look, then it falls 12%. So these are some big down pulls. People get scared when they see a 3% move like this right here. They get scared when they see these types of down. Oh, they get scared. But you know what? If this thing ain't pulling past 10%, I wouldn't be worried. Um, but when this thing starts doing something like this, let me see if I can pull this up right here. When the S&P gets to going, making moves like, let's see, from here to here, oops, on to it again. Once again, 10 days, 30% move. All right, that's what we need to see in 10 days. We need to see 30% moves in 10 days. 15% moves in 18 days. Okay. And right now, this is kind of like where we're at right here. We're kind of like right here, 9 bars. 8% in 8 bars. Okay, we're like right here in this area right here. So, and the Mayer multiple tells you what's going on. Look, buy. This is what Warren Buffett says. This market's going down here. Buy. This is going down here. Buy. So go check out the Mayor's multiple. I'll show you guys how to get it. Go look at my previous video where I say if Bitcoin is dying, I'm buying. I think that's hilarious, but it's so true. I mean, look, he was saying buy right here, buy right here. If you would have listened to this Mayor multiple, all right, in the S&P product, look where you would have been at. All right, what's it saying right here? It's got one day where it was green. The Mayor multiple was green one day. It's not time to buy yet. This thing may go lower. All right, so was there anything else I included in that video that I just didn't record my voice? This is going pretty fast too, so I'm kind of happy about that. But China, that's right. China plans to end all dependency on U.S. trade. Now, you probably already heard that news, but I'm going to tell you in the world of trading why that's important. I mean, I think it's self-explanatory. You gotta be careful. You gotta watch what's going to happen. This market could fall as a result, but I think it's a good thing because China. It's kind of like what Trump said when they were like, "Yeah, what about this trade war? You're going to start a trade war, Trump? Oh, what are you doing?" And he says, "Man, we already lost the war on trade a long time ago against China. All right." Now listen, I don't know what you guys think about that, but that's eye-opening. I believe that because they won't buy one of our cars. Now they don't want to buy anything from us. That's crazy. They're just trying to get over on us. And that's it. That's all they want to do. That's all these countries are trying to do. Now, how does that affect trade? I'm gonna leave that up for debate. And I'll see you guys next time. Peace and profit. Yeah. Yeah.